Hello traders, it's Thursday evening, March 9th, and this video is going to be dedicated to trend lines, specifically our new automated trend lines. This product took me years to develop, so I'm going to put up some trend lines and I'm just going to let the conversation take me wherever it needs to. Trend lines are actually quite complicated to automate, and they're very time consuming for you to draw because you have to pick the endpoints and you have to connect the points. So let's take a look at Netflix. It's the first stock on our list. We are going to right click. First thing we need to do is we need to get into the right scale type. We are going to be using semi-log. If you are using linear charts, please change to semi-log. This is very important because the trend lines are not going to be touching many of your candles. Even when you're in semi-log, you are going to see some candles that appear to go through the bodies of other candles. You're going to see some that don't quite touch, and it's going to leave you perplexed. You're going to be wondering, what the heck? How is this trend line drawn? Well, display matters, and it matters a lot, just as I was showing you with the semi-log. So let's click on OneOTL now. And then I'll tell you what we're going to be looking at. And there's a classic example of drawing through candles. It's not really happening. The OneOTL that you used to use, please do not use that. It is not valid. These lines are valid. I can explain how those used to be drawn, but they were just recalculated on a daily basis and redrawn. They are not nearly as significant as these trend lines. So I want to see this displayed, so I have to zoom out. And now you can see, it actually was not drawing through any candles. That is a touch point, and that is a touch point. And look, Netflix just broke down. I'm not going to put up any major moving averages. I want to keep the charts very, very clean. So you can see these are the trend lines that are currently in play. And the way that we calculate this one is in play, it will help you plan your trades, but it has not been breached. Well, what's it doing all the way out here? Well, we have a formula whereby if the stock is within 5 ATRs that we display the line. So it's within range, it's displayed. You're going to see some charts that have a lot of lines in them. Some of them will be breached, and I'll show you how to identify those. Some of them will still be active. And again, you'll be able to see where those support and resistance lines come into play. It's going to help you set your target profit. It's going to help you as far as how you scale into positions. So let's take a look at how we want these trend lines breached. First of all, we want those trend lines obliterated. What we don't want to do is to have a trend line where we come down and we just keep poking, poking, and poking, and poking, and poking, and poking at it. That trend line is going to hold. Typically, horizontal trend lines, horizontal support and resistance, tends to hold. And the market needs to have a running start at a trend line in order to really breach it. So we're looking for those long stacked red candles into that trend line and then blam, a big red candle through it, closing on its low on heavy volume. That's what we want. So you need to have that momentum into that trend line breach. You want to see it breached aggressively, and then you want to see the stock close below it if you are looking for a breakdown. That's another phrase we need to talk about. I use breakdowns to signify when a stock is breaking a trend line that represents support. This is an upward sloping low plus because we're connecting lows and it has a positive slope, so we call it a low plus. When this trend line is breached, it is bearish, so we call that a breakdown. This is a trend line that connects lows. So it is a low minus because it has a negative slope to it. In general, your trend lines that connect lows and have a negative slope are going to be less reliable than a low plus that is breached. Why? Because this trend line is moving away from price. What does that mean? Well, let's say that the stock is drifting lower and lower and you have a breach. Well, if the stock simply goes sideways, this trend line is going to be moving away from price, and price will have to keep trying to catch up to it. Eventually, it will reverse versus a low plus where it is moving into price. It is on a collision course with price. So the most common type of trend line would be a low plus, and in the case of a downward sloping trend line, it would be a high minus. Those are moving into price. So we're going to see plenty of them. So right now, those are some important distinctions to make. I'm going to continue to click. So one thing about display, very important, and let's zoom back in and let's take a look at what's going on right here with this stock, and the symbol is GS, Goldman Sachs. So let's talk about this trend line right here. This is a high minus, and you can see how it's connecting these two tops right in here, and it has a negative slope. It is moving into price. It's currently well above the current price, but it is within 5 ATRs. If we take a look at the current low plus, it has a tiny positive slope to it, and this is a low minus. So this we would like to see breached. Every trend line, every single one, we want to see breached aggressively. Blam! A nice red candle like that would be great through it. Boom! On big volume. Once we get through, we know that we've got our first target in sight with this low minus right here. Then we would like to see another blam leg through it. So now we have a reason to add to our size, add to the position, because we have one breakdown here. We get to the second zone, the second target, blam, we go through that. Now we add to the position. If the stock simply waffled around this price, we might want to take profits on this initial position. The one thing I'll mention about trend lines is they can't be super steep. When they're super steep, price movement that's stagnant or horizontal, as we see in this case, so you start drawing a trend line here, well, it's breached. Well, there wasn't really a breakdown. It's just that it was so dang steep that time alone breached it, because the sideways moving candles breached it. So now you have to redraw, redraw, redraw. Also, the one thing about very steep trend lines, so if you drew a steep trend line like this, you would go, oh baby, here we go. I have a trend line breach. So you would buy here, and then the bottom falls out. These really steep trend lines are not valid. Typically, we want to have that trend line be 45 degrees or less. All sorts of other nuances come into play. Can I connect bodies? Should I connect bodies of candles? Can I draw through bodies? That's a no-no when it comes to drawing trend lines. Should I connect the wicks and the tails? Is it okay for me to ever draw through a wick or a tail? These are all questions that have to be answered when you automate trend lines. So my point was, in this OneOTL now, I want to show you active trend lines that have not been breached that are within 5 ATRs of the current price. And my reason for that is because I want to show you where other trend lines are coming into play so that you can plan your trade. You can plan and see where those target zones might be, where you might want to be adding to those positions. And we are also showing you trend lines that have been breached, and they will stop dead at the intercept point, and we will see a couple in just a second. So as far as Goldman Sachs is concerned, we do not have a breach right here, and if we do, we want to see that huge breakdown. So let's take a look at Schwab. I think I missed that one. That actually had a really nice breach. Again, we're through the candles here. So if we zoom out, that's going to correct itself. And there you go. You can see the actual trend line connects here and it connects here. And yes, we did draw through this tail right here. It's a heavy volume bar. That's one of our rules. So now all of a sudden, when you start seeing areas of congestion, that means there are many trend lines coming into play. That means that that area is likely to have support. And remember, the trend lines, the impulse is always look for those breakdowns, look for those breakouts. Well, the trend line itself represents support and resistance. So you should not expect it to be breached. Actually, you should expect that that support or resistance is going to hold. So let's take a look at the current trend lines that we have for Schwab, and we'll describe them just to reinforce the concepts. So here you have two low plus trend lines, and we know that they are on a collision course with price. These are the most common type. This is a high minus. It's on a collision course with price. So those would be the ones that you're typically going to see drawn. This is a low minus connecting the lows, and it has a negative slope. And you can see the breakdown. This is how we want to breach a trend line. We want to have that big red candle that just blows through all of them on heavy volume. So this is a significant breakdown. You can also see, it's important to look at the characteristic of a stock. You should always be doing that. Well, Charles Schwab is typically very choppy, back and forth, choppy all over the place, right? It doesn't have that much momentum or pace to it. But in this particular instance, yes, there's some serious selling going on. So Charles Schwab was a very nice short today because it obliterated these two trend lines. Well, what about right in here? Is this a good short right here? Would I take this short? No, because if I'm looking at Charles Schwab, I'm going to see that line, and I'm going to see that line, and I'm going to see that line. I'm going to go, well, it's got to get through these three levels. And look, tiny little bodied candles in here. It's got a little bit of volume, but nothing great. And then it just kind of rallies up a little bit. And okay, well, there's a nice long red candle. So yeah, things are kind of getting going in here, and we finally have that breach. But then here we go with a nice long green candle, almost a bullish engulf. That's not the strongest type of pattern. Okay, we want stacked red candle, stacked red candle, stacked red candle, monster volume, blam, see you later, like it wasn't even there. Obliterated, obliterated. Then we know that sellers are in control. Well, until today, we didn't really see that, but that's the opening price today. You're through 1, 2, 3. Now you're through 3 different trend lines, and then you see the stock drifting lower all day. Yeah, for sure. On that type of breakdown, if I overlaid the major moving averages, you're going to have additional confirmation along the way. So we go into the 5-minute chart, you can see. Yeah, I mean, you're starting to seriously crack down. Yes, this is going to be a really good short. This is a 5-minute chart. It has the other characteristics that you need to be looking for. Heavy volume. Many other characteristics as well. I'm focused really on trend lines today, but let's put it up briefly, then let's put up relative strength and weakness. It's all about checkboxes, folks. The trend lines are a major checkbox. Let's put up OneOSI. This measures strength relative to the S&P 500. The stock has relative weakness. Checkbox. The stock has heavy volume. Checkbox. Let's put up the major moving averages. Put up the 200-day, the 100-day, and the 50-day. The stock is below the 50-day. The stock is below the 100-day. Blam! 200-day moving average. See you later. Checkbox, 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 checkbox. Okay, my odds of success on this are very, very high. Gee, if only I had a weak market. Well, you had a weak market today. It also was testing the major moving averages. So you've got everything in place. So now we're just going to flip through a few other charts, and I want to show you all sorts of different trend lines that are coming into play. JPM, take a look at that. And now I am going to take off these major moving averages. Just know that they are coming into play. That's a 100-day, that's a 200-day. You've got your 50-day right in there. But let's get them out of here so that we can clean the chart up and focus on these trend lines. So I'm going to just click on 10 studies and I'm going to clear those babies off of there so that we can focus. You can see we've got some high minus up in here, so that's a little bit of resistance, but this is really our focus. This is what we want to be watching. We've got these two nice low plus trend lines in here. You've got a touch here, 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 here. These are valid trend lines. How did we attack that trend line earlier in the week? Did we do it with a bunch of tiny little candles? No. We did it with a long red candle closing on its low on heavy volume. Okay. We've also got the stock starting to show some relative weakness. Now we have a low minus in here. We've got another low minus in here. Today, same type of pattern. We blew through it. We've also got this trend line that we blew through. Now, a couple of things on how I design this. I prefer to have more trend lines showing than less. Why? Because when I search for it, the stock keeps coming up and coming up and coming up on various searches, and it keeps confirming the position that I'm in, and it's telling me that I'm on the right side of the trade and that I should be interested in adding to the position. But truth be told, some of these trend lines may not be all that valid according to many other analysts. So in this particular case, would these 2 points be sufficient to draw a trend line? I have been tempted not to draw these, but these 2 points are significant. They are significant endpoints, I'll tell you that. But why would 2 points like that be significant? All I know is that when I draw these trend lines, if I remove these two, I'd lose a whole bunch of other ones that are really, really good. And you're going to see that. So my issue is they're damn useful and they add another additional level of confirmation for us. And many traders lack the confidence to take a trade. So if we're constantly reminded that these are valid breakdowns, and if the stock has a tendency to follow through on these breaches, even though there are only 2 points like this, you've got 2 other points right in here making a line right there. Well, look what happened. So I'll show you. Might I at some point take out these trend lines that just have 2 data points, or maybe even a data point and then 3 data points later have another connection? Maybe. I don't know yet. I do know that if that bothers you and you feel that that's not valid, you will be able to filter out those types of trend lines so that they have to have whatever you define, 5 days between the endpoints, 10 days, 20 days, whatever your preference. You'll also be able to search for trend lines based on the angle steepness, which incidentally, when we start talking about display, everybody's got a different display. My God, there is no universal display in terms of the number of pixels or the width or the number of bars. It doesn't exist. So when institutions have all of this mapped out, I had to learn this the hard way. I had to define what I thought was a large enough universe, and then I had to normalize both axes so that everything would be templated with that particular display. So I had to standardize it. That's the only way that this can possibly make sense. So if the trend lines don't look proper on your display, you need to zoom out on them. So let's keep looking. We're going to look at some bullish stocks too. We'll take a look at everything. We'll find some that have a whole bunch of lines coming into play. So I suspect that if I zoom out, this is going to go away, but it does bring up a good point. So how do you know when there's a good trend line breach and a bad trend line breach? So in this particular instance, without doing anything else, let's assume these are valid trend lines. Poke, 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 poke. No, that is not what we want. That is a sign of support. Doing, bounce. Yeah, but they were breached. That should have been a good breakdown. No, these are going to normally hold. That is support, especially if the trend line is horizontal or very close to it. Those horizontal support and resistance levels tend to be very sticky. And typically, if they are going to be breached, you're going to have to do it with some inertia. So you might bounce off of it like this and then blam, red candle, blam, red candle, blam, red candle. Okay, that's how you break down through some of these horizontal support levels or some of these very gradually sloped high plus trend lines or gradually sloped low minus trend lines. As I mentioned to you though, when I zoom out, this is going to change dramatically. So I'm going to zoom out and we'll take a look at where those trend lines actually come into play. And you can see, yes, this is quite different. That's a valid low minus trend line. This is a valid low plus trend line. The stock is out of range. Perhaps a little bit of a wedge formation in here. So we're going to continue to go. Take a look, but Costco was fairly weak. It was on one of our searches, and that's all I'm doing. I'm not searching for these trend line breaches. Maybe that's what I should do because we have searches where we are specifically looking for these trend line breaches. I'll show you those in just a second. Snow would be another example. You can see this is a really nice trend line. This one's going to be significant. When it's breached, we're going to know about it because it's going to start showing up on our searches. These are two valid connection points. So we're going to continue to, we'll go through a couple more of these and I'm going to zoom back out. Oh, this is a beauty here. Gotta love this. So what do we got going on here? Well, we have a stock that is in a serious decline and then it bounces a little bit. Well, that leads us to this low plus trend line. Earnings before the open, blam, breakdown. Let's go into this view so that we can see it a little bit more clearly. And now you can see that those are excellent points. And we have two breakdowns with a long red candle on heavy volume. We will also see, if we put it up, we're going to see some major moving averages that have been breached. The stock breaks through 100-day, 200-day moving averages and can't get back up through them. Okay, that is a sign of resistance. Earnings before the open, negative earnings reaction, two major trend line breaches on heavy volume, relative weakness. Checkbox, 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 M5. There's your opening, checkbox, negative relative weakness, heavy volume, can't get off the deck. Yes, this is a good shorting opportunity, and you know it is because right from the open, you've just breached two trend lines. And you're below the major moving averages. All the other things I told you about. This is a bearish flag. There's your flagpole. There's your little bounce. Upward sloping trend line. Breach to the downside. Blam. See ya later. mRNA. Now, here's an instance, and this is why I like having multiple trend lines drawn to a specific point. You can see they originate from many different points. This is telling me there is support here. There is big support. So I should expect that the stock is going to hold this support level. Look at all of the support right here. Now the stock is weak relative to the market. 1OSI less than 0, relative weak. Now we also are below the major moving averages. We also have a weak earnings reaction. Earnings before the open, sells off, can't recover. Do I short right here? Because, hey, look, we broke. No, this would not be as strong a play yet. Very important word, yet. Why not? Because you had this initial drop and now you've got a couple of stacked green candles. We don't typically want to see a big bounce once these trend lines have been breached. We want to see that red candle, red candle, red candle, right through it, obliteration. Now, when you have multiple support lines like this, that tells you that if it is breached, it's going to have some pretty nasty selling on the backside that is going to be sustained. So it's like running through a brick wall and nothing behind it. Once you get through that brick wall, you got plenty of room to go. So if tomorrow I see a long red candle through these two support lines right in here, then yes, this makes a good short. Well, what if I shorted it up in here? Now what? Well, this was not a particularly strong breach because you had tiny bodied candle, tiny bodied candle, tiny bodied candle. No, why? What are you doing? No, this is not what we want. We want that. And we want that right through all of those levels. And then you get this bounce in here. We don't want that. I don't want anything like that. And now I got to wait and wait to see if this stock continues lower. So your entry point would be, okay, I see this support held. I'm expecting support to hold. I'm not expecting this to be breached. So now if I watch it and it comes up on some searches and I see that crackdown, fine. Then I can short it. Let's continue to look. The more examples I show you, the better. So here's another one of those examples where you've got this breakdown. There's only 2 points that are connected here on this low minus trend line, but dang, was that a good one? And if I stop showing you these, I'm going to remove a lot of these really good breakdowns. So I pick my endpoints very, very carefully, and there is a process and there is a reason that this one and this one was picked. I'm not going to tell you why, but it is a significant trend line because all of them that I look at, I see follow through, and that's what I want. And it does get me into this trade earlier. If I didn't have these 2 points, yes, this is still really nice. And yes, there are rules of when we can draw through tails and when we can't. So that is connected to that tail to that, and that is a significant breach. And that is fantastic follow through, relative weakness, heavy volume, ZS. See ya later. Probably going to be a very good short for tomorrow. Do a couple more here. This is a significant trend line. We're not close to breaching it right now. It's the only one in view. HD, same thing, not in play yet. Is this going to be a good one? Well, stock is herky-jerky, okay? It just can't get going. I don't like this kind of price action because as soon as you get a drop, it bounces. As soon as you get a drop, it bounces. Well, is something going to change in Home Depot that all of a sudden You're going to start stacking red candles? Probably not. They're a retailer, pretty stable business. People are always doing home improvement. So that's why you get this type of price action. And even with the market pulling back, you get, red candle bounce, red candle bounce. So you can look at something like this. Maybe you can sell it out of the money, bearish call spread against it. That would certainly work, especially if you had resistance here coinciding with a major moving average. Okay, that's one way you could play it. Stock is relatively weak. You can see that the volume is somewhat on the heavy side, blue line above zero, and it had a negative earnings reaction. So do a couple more. We'll do Disney and maybe CVS. Disney, I don't have any trend lines on. Well, how can that be? Well, do you see how steep that trend line is right there? Ah, you missed it, Pete. Oh, that would have been a nice one. Boy, look at that steep baby right there when that thing cracked. Man, did it go down. Well, I am aware of that line, and we are going to be searching for fails like that. Let me see if I can pull that up on my steep search here. Yes, we're certainly aware of that line. You can see it drawn right there. But you'll be able to search for it at some point in time. You're just not going to see it right now because those steep trend lines are easily breached just by time. Steep trend line, stock goes tick, 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 tick sideways. It's going to be breached, 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 breached every time you draw to it. It's another reason you don't draw to the super steep ones. But yes, if we know that we've got a super steep trend line on the way up that's been breached, and we had some downward sloping trend lines where the stock got above them and then failed, that would be nice to know because that would be a failed breakout, and then we would be able to catch this on the backside. So that is how we are going to be catching these in the future. So CVS has been just tanking. What a nasty stock. We caught this back up in here. We had plenty of breaches back up in here too. And I could show you a view that all of you have this available. I don't know if I want to keep showing you this view because it freaks people out. And they're like, oh my God, I can't make heads or tails out of this because I will show you all the different trend lines. So this is a very valid trend line. This is a beauty. So this is a low minus, touch there, touch there. This is how we want to break these trend lines. So you remember I said, if you come down on a horizontal line, you doink, 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 nothing going. It's going to bounce. That support should hold. Same like up here. Okay, horizontal, doink, 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 doink. If you get a little breakout like this, oh, here we go, here we go. No, you needed to clear that and have a long green candle through it. Well, instead we get a bearish engulfing candle. All right, well now if you've got failed upside breakouts and you've got that and that, yeah, that would be good to know of. So I'm sure there is a trend line right in here, and we can check that in just a second because you'll be able to put up the past view and see where the past trend lines have come into play. So in this particular case, that was a beautiful breach. That is exactly how we want to do it. So it gets a little bit of lift, earnings before the open. Didn't like the earnings announcement, so the stock starts drifting lower. As it comes down into this support level, it craters. See you later. It can't catch a bid. Relatively weak, heavy volume. We've been trading the heck out of CVS in the chat room. Fantastic swing opportunity. So let's take off the trend line for a second and let's go into the past view. And now you can see these are the past trend lines that we've had. And you can see there is a horizontal trend line breached. There's a little bit of room on the downside to this trade, but you had to be careful because it's a horizontal poke, poke, poke type of trend line. So yeah, there was some room in here and it looks like it's starting to get going, but as soon as you start reversing that move with a green candle like this, you got to be out. Take your gains, see what else happens. Now you get this long candle and you can see this longer term trend line here. Yes, breach, breach, breach. These are all confirming that this is going to be a good short. Come down in here. Now we get another bullish engulfing candle. All right, you better take your gains on that short position right there. Here you've got a low minus breach after that fail up here. So let's talk a little bit about this and some of the studies that we're going to be developing. So here you've got your high minus trend line breach. Okay, we know there's resistance, so we're poking, poking, poking at that resistance, and then we get this type of reversal with a long bearish engulfing candle. And now, if you extend this trend line within 10 days, which we'd like that breakout to hold for at least 10 days or so and then continue to move higher. But if within 10 days it can't hold this breakout or that breakout and it fails, okay, that's good information because we're going to be watching for that failed breakout that tells us that the stock is probably at the top of its range and it is about to reverse. And then we are also going to be looking for confirmation with another trend line breach. So if this was a high or a low plus trend line breach that coincided here as well, we would have everything we need to get short here, which this may have been too steep. You could be saying, hey, Pete, you said you were going to connect that with that, but I'm not seeing it here. Well, so let's go back into another view and I'm going to take that trend line off. So we're not going to show it. And let's see if it shows up in our steep trend line. Aha, yes, we did know of that one. So you see what can possibly happen in the future, and I'm going to be working on this, is you get your high trend line and then you get your failed breakout the other way. That is how we are going to catch these. So again, you get your high or your steep trend line coming in like this, and then you get your failed breakout, goes up, comes back down. Now you've got a winning combination. You know that's a steep move because you had that steep trend line. And you know that you have a top here because that was a failed breakout. And then you start looking for that. We're going to catch a lot of those. I just have to figure out the system for it and I have to test it. We're going to have it. But for right now, we're just trading regular old trendline breaches and we are looking for continuations. So we are also looking for some reversals. So let's continue to go through and take a look at the now view. If the past view intimidates you, it's okay. And maybe I'll click on one more for a past view. And I don't know, maybe we'll go with maybe CVX or something. So this is a oil company, so fairly stodgy stock, but you can see some of these previous trendline breaches, and this is going to give you confidence to trade the trendline breaches. How do I know Pete's trend lines are even any good? Well, you go into the past view and you'll be able to see, that's a nice breakdown, breakdown, breakdown. Okay, down near support, better watch it. Take gains in here. You've got a nice trend line breach right here. You got a nice trend line breach right here. Decent upside to it. Got a nice trend line coming in here, longer term. Got some downside right in there. That's nice. Now I have follow through, confirmation here, starting to hit support. You get the idea. Use the past view to see how the trend lines have performed previously. Get your comfort level and then focus on that now view, because once you understand that these trend lines are legitimate, you want to have the confidence to trade them. I'm going to show you a bunch of trend lines. So when there's congestion, know that you need those stacked red candles to blow through that level. You're not always going to have congestion. Sometimes it's just going to be one or two candles. I think CAH or maybe CI were a couple of stocks that were traded today, and those were just nice, clean breakouts. There was no congestion. Connection point, connection point, connection point. You've got the stock, beautiful breakdown, long red candle. This is a longer term trend line. Those tend to be a little bit better. We've got some distance between the endpoints. Those also tend to be a little bit better. You'll also be able to search eventually for how many days are between the endpoints. We'll also be able to search for what is the duration of the trend line from the time that it hits the intercept from the time that the starting point was drawn. So if you want really long trend lines only, you'll be able to find them. I want to give you maximum flexibility. The trend lines are there. And you start adding all the other variables in, relative strength, moving averages, uh, everything. Then you're all of a sudden getting to the absolute best possible trend lines. Heavy volume, all the stuff that we add in custom search, you start adding all those variables together with exactly the types of trend lines that you like, you're going to have an incredibly powerful tool. So yes, this was a very nice breach. So in here, you can take your initial position. You can see visually there's horizontal support. I'm sure there's some major moving averages running in here. Blam, another red candle. Okay, this is a good short position. I can add to this. All right, now you start coming down to this low minus, and it's like, all right, long red candle. Do I take some gains here? Because I've got really nice gains that are, do I wait? So you wait for an extra day and then you get your next leg lower. So these lines are providing you with a target. How much lower might that stock possibly go? Let's take a look at some bullish ones. And I think I'm going to call it a night then because I'll probably have to do a number of these videos to kind of drill home my points. Here's a breakdown hard search. So this is a previous trendline breach in the last day or so. Lots of results. Today was just a nasty day for the market. So I'm going to add a filter and I'm going to add option liquidity as a filter. And that takes our list down dramatically. So let's take a look at NEM. We'll see that breakdown. So here we've got a long red candle and there is a low minus with the stock closing below it. Also through some major moving averages. Lift we'll take a look at. There's a low plus. Kind of drifts lower. I'm not super impressed with this because I want to see that long red candle. So there's nothing here that really is that attractive to me until we finally start seeing this heavy selling today. And this is a pretty significant trend line that goes all the way back here. And you can see how the stock is resting right on that point. So tomorrow, if I'm short, I want to see some follow through selling. I want to see that blown through tomorrow. It has relative weakness, not really good volume though, so not one of my favorites. A breakdown times two. This search is going to show me stocks that have multiple breakdowns. I showed you that JPM, 1, 2, 3, 4, 5 different breakdowns. More breakdowns better? Yeah, it can be, but it could also just be that that is a congestion level where lots of trend lines are coming into play, where that support is going to be stronger. So yeah, a breakdown there would be significant, but I can show you lots of other trend lines where you may only have one trend line and it's absolutely obliterated that are equally valid. But I thought this would be an interesting search for us. And one of the criteria for this particular search is that it can be a failed upside breakout. So you got that line, it breaks out, and then it fails within 10 days. And then subsequently, you have a low plus that fails. That would be a times two as well. And that was my intent, was to catch some of those in this search as well. And those could have been part of the times 2 because that is a breakout and that is a failure, failure, failure. So yes, this has multiple breakdowns. So the breakdown times 2, we'll take a look at some others. SQ, is this a good one? Very, very choppy stock. This is a valid trend line, long red candle. Yes, I would take a position there, but I would want to see, because there are going to be some moving averages coming into play here, what moving averages are in play with that breakdown. And here you can see, we'll go back into this view here, the 50-day moving average was also breached. And yeah, I got room down to that 200-day moving average and the 100-day moving average. So yes, I would short that initially with a smaller position because I'd like to see some follow through right down in here. And if I get it tomorrow or the next day, yes, it's got a pretty easy range. It's at 73.80. You should be able to get down to $70 with a pretty easy path. There's not a lot to stand in its way. You got a little bit of horizontal support here around the 71.80 level, but yeah, should be able to do it. I'd like to see better volume, and the stock does not have relative weakness. So those are two missing variables. Check boxes, check boxes, check boxes. How do I know a good trendline breach from a bad trendline breach? Trendline breaches are like everything else. They are one additional checkbox. They are not the end all be all. Heavy volume, relative weakness, also very important. Major moving averages, so watch for those. Let's continue to take a look at a couple of others. SLB, you've got multiple trend lines coming into play here, and you've got a breakdown below the 100-day moving average. You've got 3 different trend lines there. You've got another one coming into play right here. This is a sticky area with lots of congestion. You can also notice stock up a little bit, down a little bit, up a little bit, down a little bit, up a little bit. This stock does not go ka-chunk, 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 ka-chunk. Well, I would prefer that. I would prefer not to have something that is willy-nilly meandering back and forth. Would a long red candle through this low get me interested? Yeah, it'd get me interested for a partial position, but wouldn't get me excited because this is certainly just choppy back and forth price movement. LI, another one that's a little bit on the choppy side. You can see gappy. I think this is a Chinese stock, so gap, 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 gap. But yeah, we've got multiple trend lines that are breached, and you've got the 100-day moving average right here in the way. So this is kind of nice. You could probably day trade it short right in here, and you're breaking a couple of other trend lines. It's nice. You've got this longer term trend line here that we're below, but there's just not enough room. I want to blow through that. Then it becomes a lot more interesting to me. Do maybe one more with the search, Tava. The more we look at, the better off you'll be because you'll have lots of examples. So here we need to zoom out. What's this? So we know we got some issues there. So we start zooming out. Now we can start to see, okay, well, there's the real trend line. Yeah, you know what? Teva is coming up on some major long-term trend lines. Is it choppy? Oh, heck yeah. But this is pretty nice. If it can get through that 200-day moving average right there, it's got clear sailing for a long way. We could see some relative weakness right there. So let's continue to go down and see what else we got cooking here. We'll go maybe into heavy selling, and then we'll shift to the long side. We'll take a look and see if anything's coming up on the bullish searches. And Adobe, there's nothing going there. It's holding up pretty well. PDD, we've got multiple support lines coming into play right here. Long red candle, got the 100-day right there. You know what? Chinese stocks were really hit hard today. it's actually holding its own pretty well. If it blows through those and gets through that 100-day moving average, then it's got lots of room to get down to that 200-day moving average. So then it would be more compelling to me. And you've got also that trend line right there that would be breached. So CRWD, that's actually been strong recently. So here's an example of a high plus breakout to the upside post earnings. I can't recall if I mentioned it in the video or not, but a high plus breakout is going to be less reliable than a high minus breakout. Why? Well, those high minuses are connecting the tops, the highs, and they are on a collision course with price. So when the stock rebounds, that's going to be a more reliable reversal. In this case, a high plus is actually a continuation. So you're trying to catch a freight train or a train that has left the station. It keeps moving away from you. And a lot of these high plus lines, if the stock just goes sideways, the line keeps distancing itself from price. And it gets harder and harder and harder to catch up. And so, because you're chasing price, the stock is oftentimes overextended, and so it'll break out through that high plus and then fall right back down, just like this one. So if you've got those failed high plus breakouts, and then you have a low plus breakdown, so let's take a look at what that might look like. Yes, we're going to catch some of these. We're going to catch some of those on those breakdown times 2 because this is going to count as one bearish trade and one bearish breakdown right here. And then now you've got a low plus breakdown that you would have right here. That would be significant. So the stock has shown us that it's topping here and it's breaking a low plus. Yes, we're going to catch that type of trend line as well. So I know this is getting a little bit complicated. So we looked at GS earlier. Poke, 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 poke. No interest. Poke, 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 poke. No interest. We need that long red candle. Here we go again. Pokey, 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 pokey on that horizontal line. No, we need long red candles, and we need relative weakness, and we need heavy volume. Let's shift gears. Let's go into some bullish searches. Let's see if there's anything to look at here. And GE. So this is what your high plus and high minus lines will look like. So this is a nice breakout right here. This is a high plus and then boom. But you can see multiple levels of resistance. Let's zoom out and see where those are coming from. Okay, you know what? Those are all valid trend lines. These are all valid trend lines. So yeah, stock is going to hit some resistance up in there. Would I be gangbusters wanting to go out and buy it? Not with a bearish market backdrop right now, but yes, if the market were bullish, it might be interesting for me. And we're not going to see a lot of stocks. So I'm going to take off the option liquidity screener and then we'll be able to take a look. All right, so here are multiple downward sloping trend lines. Let's go back and see where they come from. So we're going to zoom out, see what we got going here. So we've got a number of them coming into play right in here. That's a nice little breakout. We have that 200-day moving average. The stock is able to get through this high plus. Yeah, on a bearish day in the market, this is pretty dang nice. Got your little upward sloping trend line here. And here's the tell. Got to have that massive, massive volume. This stock was able to rally when the market had its head handed to it. So you can see it held its relative strength pretty well all day. ASAN, would I go out and buy it tomorrow? Probably not, because I think the market's going to sell off tomorrow. We had a nasty day in the market. Might as well talk about it for just a second. This is what the market did today. This is a key bar, and I can take that off. That's another one of our studies, and another way that you would know that you have a good trend line breach is if you have a hollow red bar. I'm going to take a key bar off, and then you'll see long red bar through the 100-day and 200-day moving averages. Yeah, that is significant. So you get this little bounce that we had Thursday and Friday, and then blam, blam, right back at it. Powell spoke before Congress this week, and he was as hawkish as can be. Now there's an 80% chance that we could see a 50 basis point rate hike. That's up from a 25 basis point rate hike just a week ago. Not good. Not good for the market. I think we're going to see some additional selling. Tomorrow we get the jobs report. So here's another nice downward sloping trend line. There's your breakout to the upside. After earnings before the open, hence the B. Yeah, look, it was able to hold the gains. You still got to get through this horizontal resistance, but yeah, that's a pretty nice little breakout. Just going to see what, if anything else, there is. Looking for some larger stocks that might have come into play. There's another example. Here you've got a high plus. There you've got another high plus. We can zoom out and see where these are coming into play. And there you've got your connection points. So yes, stock was able to get through horizontal resistance, heavy volume, relative strength. I would not buy this stock right now because you got to have a market tailwind and you want to see that stock hold that technical breakout. I suspect that it will. That's how you use those trend lines. So I don't think I'm going to be able to find too many that are going to look great on the upside. Yes, if I went into some of the UVX type option implied volatility ones, those were all spiking because of the hedges going on. Option implied volatilities are spiking because of the market drop today. So there's another example of a trend line that's drawn, a longer term trend line with the stock trying to break out. Couple of notes on this. If you have a stock that has been just pummeled like this, and you've got these longer term trend lines coming into play, this is not ideal. You should not be thinking, gosh, I'm going to catch this one, and when it goes back to where it used to be, I'm going to make $1 million. No, there's heavy selling pressure on this. You don't want to be bottom picking out there. You want to wait for those breakouts, and they need to be sustained long green candles, and they need to be on heavy volume. After a bloodbath like this, your expectation should be this is just a short covering bounce. That's all this is. This is nothing material. Until the stock comes up, higher low, double bottom. Okay, now we're getting up, way up. All right, now we're getting way up. You back into the middle of the range. All right, now you know that that is a legitimate bounce. But in the early stages like this, your first expectation should be that this resistance is going to hold after that type of heavy selling, and any kind of uptrend line that I have here that's breached to the downside, that's probably going to be the one that I want to follow because it is likely to test that low. So when we start looking at stocks that could be excellent on the long side, you want to be looking at stocks like GE, not per se up here near resistance, but here where you've got downward sloping trend line right there. This is where you want to be looking at it. Gee, I wonder if we caught it. Well, now you can go back and you could say, I wonder if the trend lines actually caught that. So I hope they did. So we'll take a look at the past view. And yes, there's our trend line right there. That was a nice one. There was a high plus. That was a nice one. There was another one. Okay, yeah, we should have caught most of that move right there. Hey, There was one of those tiny little ones. Yeah, that was a pretty nice move in there too. Look at that one. If I start erasing these little guys in here, I'm going to miss moves like that. I'm telling you, some of these little ones like this right in here, look at how dang good those are. It's these endpoints. I worked really hard to find these endpoints. It's another nice little breakdown. Use that past view. Get your confidence. These trend lines are excellent. At very minimum, on a day trading basis, you're going to see lots of follow through. So your high minuses that are longer term that come into play are going to be excellent buying opportunities and are more likely to have follow through because you're catching reversals. When you start looking at high pluses, realize that they are connecting near a resistance level and that on a breakout, you have to be very tenuous and you have to expect that that resistance is probably going to hold. The same would be true with a low plus being more reliable and a low minus being less reliable because bounce, 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 bounce. That is support. And a breakdown needs to happen like that. It doesn't need to happen like that. Little willy-nilly, pokey, pokey, pokey. No, but blam. Okay, that's a breakdown and that's a low minus. I'll take that one and I will expect follow through. There's a low plus. Blam. See you later. I hope this video helps you. Tomorrow we'll do some Q&A in the chat room and we'll talk about these trend lines. Thanks everybody. Have a great night.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.